Hello, I'm Louise Fisher, and welcome to Baxendale EO Bitesize, helping you with your succession journey in accessible, bite-size chunks. In this video, we're going to look at designing and implementing employee ownership transitions the Baxendale EO way. With over 20 years' experience of helping businesses and their owners navigate successful transitions in ownership and leadership, we have advised over 250 businesses on their employee ownership structures and helped around 200 companies become employee-owned. We have worked with SME businesses of every shape and size from a wide variety of sectors and from all over the UK. As an employee-owned business ourselves, we believe passionately that EO is a great way to do business, and we strive to help other businesses remain independent and vibrant beyond the retirement of their original owners as part of a new employee-owned structure. At Baxendale EO, we design and implement creative employee ownership solutions that meet the succession objectives of business owners and their organisations, putting you at the heart of our process. Now, there are a number of succession options available to private businesses in the UK. In our experience, a one-size-fits-all approach to business succession is unhelpful, as every business and every business owner is different. We have learned that the most successful succession transitions occur when business owners have had an opportunity to explore and appraise all of the succession options available to them. Only then can a bespoke succession plan be prepared that meets the individual needs and objectives of exiting owners and their businesses. Through our work with SME businesses in the UK, we have found that 5 succession objectives are often of fundamental importance to exiting business owners. Objective 1. Ensuring that the business continues to be sustainable in the future beyond the tenure of the current owners. The second objective is about preserving the business legacy, which can include the name above the door, the reputation that has built up over the years, and the way the company carries on its business. Objective 3 is about receiving a fair return on the time, energy and money that owners have invested in the business over the years in a way that allows the business to remain viable. Protecting employees' jobs is objective 4, and many of the employees will have played a significant role in the business's success over the years. Finally, objective 5 is about supporting the local community, particularly in smaller communities where local businesses can employ a substantial portion of people in the area and play an important role in community life. Now, we recognise that these 5 succession objectives will not be appropriate for all businesses. For example, if maximising the return on an owner's investment in the business is a primary goal, or external investment is needed to enable expansion, it may be that exploring a trade sale, private equity investment, or public flotation of shares would be more appropriate. But these are the 5 succession objectives that are often fundamental to successful employee ownership transitions. Continuity and sustainability of the business are typically central to any EO transition. The business legacy can continue through the people who know the business best, its employees. They understand the business and its culture and values. The exiting owners and management are in control of valuation of the business for the purposes of an EO transition. They're in control of cash flow and the structuring of repayments in a way that balances 2 things. On the one hand, ensuring the exiting owners have enough cash to be financially secure in the next stage of their life, and on the other hand, the business's ability to make payments to the exiting owners while continuing to thrive during the repayment period. So, what is employee ownership? Employee ownership is where all the employees of a given business have a significant and meaningful stake in that business. This usually means that at least the majority of the ownership in a business is transferred to its employees. The employee ownership model is established around a number of clear principles and choices of structures that have the flexibility to suit the circumstances of most businesses. One available structure is the direct ownership model. In the direct ownership model, employees become individual shareholders in their companies. Shares are usually made available to employees using a share scheme, and there are several different schemes that offer tax advantages to employees looking to buy shares in their companies. As direct shareholders, employees can influence the direction of their company, and they can benefit financially through dividends as the company grows, and ultimately when they sell their shares, from a capital benefit if they sell their shares for more than they paid from them. However, employees would need to be in a position to use their own cash to purchase the shares in the direct ownership model. And most companies would oblige shareholders to sell their shares when they leave their employment with the business. Another ownership option is indirect ownership. And indirect ownership is where some or all of the shares are held collectively for the benefit of all of the company's employees, usually using an employee ownership trust or EOT. The EOT model gives employees many of the benefits of ownership without people being obliged to buy shares directly with their own money. An EOT provides a stable ownership base for the continuity of the business as an independent entity, and the introduction of an EOT also supports good governance of the business, as ownership and leadership of the business are separated, often for the first time in the business's life cycle. Usually, there is some employee representation on the EOT, which can add an extra layer of accountability for the leadership of the business and a real sense of ownership for the employees. The vision and values of the business and the exiting owner's wishes for the preservation and extension of the business's culture, so the bit that really makes the business unique, are often expressed in the documentation establishing the employee ownership trust. Alternatively, a hybrid model of ownership is available under the employee ownership model. Many business owners choose a hybrid or blended model of employee ownership as their succession solution. In this model, the majority of the shares in the company will usually be held by an EOT, and some of the remaining shares or options over shares in the company will be made available to employees as a way of incentivizing key employees in the business. Employee shareholders may have voting rights within the governance of the business and can have financial benefits such as income from dividends and capital gains if they sell their shares at a profit. The EOT provides stability and continuity of ownership for the future, and it can also provide a share warehouse to enable minority employee shareholders to realise the value of their shares when they leave the business without the need for an external sale. Now, the hybrid model can also enable the exiting owners to retain a minority, legacy, or family shareholding in the company if they wish. This allows the exiting owners and/or their families to continue to participate in decision-making in the business and remain custodians of the business that they've built up in the future. So employees are given the opportunity to participate in and benefit from the success of the business via their ownership of the business via the employee ownership trust. But the legacy shareholders can also have a say over the things that really matter to them through a continued minority shareholding. Now, there are also some tax breaks that make a move to employee ownership even more attractive to exiting owners and employees. The tax rules currently provide that if an EOT buys at least a majority of the shares in a company, the sale proceeds should be exempt from capital gains tax, provided that the transition to employee ownership is structured correctly. There is currently no limit on the value of this exemption, and in addition, employees can benefit from an income tax-free bonus of up to £3,600 per year. So an employee ownership transition can meet your succession objectives in a way that works for you and your business. And there are some tax advantages too. Our experienced multidisciplinary team of EO experts can help guide you through your EO transition from initial discussions to design and implementation. Our process puts you and your business at the heart of your bespoke succession solution. So please get in touch if you would like to chat about what an EO succession solution could look like for you and for your business.